Okay, they have two choices here. Either they do not claim jointly and they are not eligible for any premium tax credit, or they need to file jointly for that tax year. It's kind of what it comes down to. So, when determining a household, include these details here. Include your spouse if you're legally married. If you plan to claim someone as a tax dependent for the year you want coverage, you do include them on the application. If you won't claim them as a tax dependent, do not include them. That's a big one you'll see with split families, divorced. The dad's claiming them this year, the mom's not, vice versa. So you'll see that one here and there with dependents. Include your spouse and tax dependents even if they don't need health coverage. So now here are some exceptions to the basic rules. If you follow this link, we'll provide this slide doc on the All Insure, the Insure University, excuse me, your portal access. But here, income type, federal taxable wages from your job. Include as income? Yes. If your pay stub lists federal taxable wages, use that. Tips? Yes. Self-employment income, so like a 1099, commissions? Yes. Unemployment compensation? Yes. Social Security? Yes. However, you do not do SSI. We'll go over that. Social Security disability income, yes, but do not include supplemental security income. So you do not do SSI. That was one of the hardest ones for me to remember. Not that it's not difficult, but SSDI is included as income. SSI is not. So keep that in mind. Retirement or pension income, yes. Most IRA and 401k withdrawals. So alimony, it depends. That's one that's going to be dependent on circumstances. Child support, no. Capital gains, yes. Investment income, rental and royalty income, yes. Excluded untaxed foreign income, yes. Gifts, no. SSI, no. Veterans disability payments, no. Workers' comp, no. Proceeds from loans, no. Child tax credit checks or deposits from the IRS, no. Now, when you get those one-off questions of, well, I get this income, is this included? Reflect on this chart, reflect on the resource from healthcare.gov. Just because it's income does not mean it goes on an application. The biggest one I think I see that should not be on an application is SSI. So please make sure that you understand that if they have SSI income, it is not counted as income on an application. Now, one thing I do want to note, if it is within a tax household, like we talked about earlier, if it falls into this category, then all individuals receiving income needs to be reported. So if someone has a W-2 job, someone's 1099, someone's getting a little here, a little there, everyone in that household, you need to report the income. Um, Biggest thing is just please make sure you understand what needs to be included and what does not. I'm not going to beat that to death. You will have access to this chart. You will also have access to healthcare.gov. They have all this information there as well. Okay, let's jump back into this. Here's the federal poverty chart. Now, this is going off of 2026. This is really important for you to have as an agent. Biggest difference we saw this year with the premium tax credits, the enhanced tax credits leaving, it's called the 400 cliff. So what I mean by that is once they get past that 400% FPL, no tax credits available. They just disappear. So I was actually doing a quote for an individual and his spouse just last week. So his household of two, and they told me, you know what, David, we're probably going to make anywhere from 85,000 to 90,000 is what they told me. So I said, great. And then he goes, actually, just put 90,000 just so we play it safe. So if you come to household size two, you jump up here. We put 90,000 on the quote tool. Boom, no tax credits. They're a bit of an older couple. So their plan was the cheapest bronze plan. I mean, we're talking 1,200 bucks, 1,300. I can't remember exactly, but since they were in the older demographic, they had the higher premium cost. And they're like, whoa, whoa, whoa. So we took it back. I said, well, let's take a peek here. Let's look at 85. Let's just play it within your window. And all of a sudden they have a, $900 premium tax credit. And so, I went very carefully and very in detail over the tax attestations, what it would look like if they did make that 90. They would end up, paying whatever that premium tax credit excess was back. And he said, no, David, we have plenty of flexibility to get our income to be at 85. That's not a problem. Still haven't done the application yet, so it's not an actual application we've done, but that was a quote I ran for them. So as an agent, it's really important for you to know what these numbers are. Biggest reason is the lower income individuals. If they're too low, it's going to be more of a Medicaid case. And then your other individuals, you don't want their income to be too high. And if it is, that's okay. It's not something that you manipulate. If this individual said, "Hey, David, we're going to make 170," okay, that's what you're going to pay for your insurance. That's just how it is. So you don't manipulate the numbers. You don't move the numbers to be in your favor or the favor of the client. But if you're, say he told me that on their 1090, their 1040, they made $86,600. Yeah, we could probably find a way, or their tax professional. Remember, you are not a tax professional. That's something important to note. We're not tax professionals. We don't give tax advice unless you actually are. Yeah. If they made 86,600 last year and said, yeah, we'll probably make the exact same, there's probably a way that their tax professional or themselves can find a way to get rid of $40. That's